This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices were little changed on Tuesday, holding near the two-month highs reached in the previous session, on expectations for rising fuel demand from the summer travel season and possible U.S. interest rate cuts that could boost economic growth. Brent crude futures rose 28 cents to $86.88 per barrel as of 0634 GMT after gaining 1.9% in the previous session to the highest close since April 30th. U.S. West Texas Intermediate crude rose 20 cents to $83.58 a barrel, after gaining 2.3% to its highest since April 26th.
U.S. crude oil and product stockpiles were expected to have fallen last week, a preliminary Reuters poll showed on Monday. 4 analysts polled by Reuters estimated that crude inventories on average fell by 200,000 barrels in the week to June 28. The poll was conducted ahead of reports from the American Petroleum Institute Industry Group, due at 4:30 p.m. Eastern Daylight Saving Time, 2030 GMT, on Tuesday, and the Energy Information Administration, the statistical arm of the U.S. Department of Energy, due at 10:30 a.m. Eastern Daylight Saving Time, 14:30 GMT, on Wednesday.
Moving on to the top news in the energy sector.
European manufacturers of hydrogen equipment have urged the European Union to step in to help the industry compete with cheaper Chinese producers, in a letter seen by Reuters on Monday. The companies, among them ThyssenKrupp Nucera, Siemens Energy, and Nel Hydrogen, want Brussels to do more to ensure Europe-made equipment powers the EU's plan by 2030 to produce 10 million tons of renewable hydrogen using electrolyzers, machines that use electricity to split water to produce the green fuel. China is rapidly expanding its production of hydrogen equipment and is now home to 40% of the world's electrolyzer manufacturing capacity, up from 10% last year, the letter said, adding that state subsidies were giving Chinese firms an edge.
Saudi Arabia's energy minister announced on Monday the discovery of 7 oil and gas deposits in the kingdom's eastern province and empty quarter, the official Saudi news agency SPA reported. Saudi Energy Minister Prince Abdulaziz bin Salman said state oil group Saudi Aramco had discovered 2 unconventional oil fields, a reservoir of light Arabian oil, 2 natural gas fields, and 2 natural gas reservoirs, SPA said. 2 unconventional oil fields and 1 reservoir were discovered in Saudi's eastern province, while 2 natural gas fields and 2 reservoirs in the kingdom's empty quarter. Next, we have the top news in metal markets. Gold prices slipped on Tuesday as the U.S. dollar held firm, while investors awaited comments from Federal Reserve Chair Jerome Powell and key jobs data for further clues about the interest rate outlook. Spot gold was down 0.2% at $2,327.06 per ounce, as of 0710 GMT. U.S. gold futures steadied at $2,339.10. The dollar was supported by rising U.S. bond yields, making bullion less attractive. Benchmark 10-year Treasury yields rose to their highest levels since late May on Monday, with analysts attributing the move to expectations of Donald Trump winning the U.S. presidency and raising tariffs and government borrowing.
Copper prices rose on Tuesday, as stock withdrawals in South Korea relieved some oversupply pressure and as signs emerged of improving demand from China. 3-month copper on the London Metal Exchange, LME, rose 0.1% to $9,640 per metric ton by 0748 GMT, while the most traded August copper contract on the Shanghai Futures Exchange closed up 0.4% at 78,690 yuan, $10,822 a ton. At the LME Gwangyang warehouse in South Korea, 8,000 tons of fresh warrant cancellations in LME copper warehouses signaled that inventory is likely to be shipped out soon. Meanwhile, the discount to import copper into China also tightened, suggesting improving appetite.
We will now look at the top news in the agricultural sector.
The condition of the U.S. corn crop deteriorated in the latest week while national soybean ratings held steady after floods swamped portions of the northwestern Midwest, U.S. government data released on Monday showed. The ratings for both corn and soybeans remained the highest for this time of year since 2020, and corn and soy futures fell sharply in June on oversupply concerns. The U.S. Department of Agriculture rated 67% of the corn crop as good to excellent in its weekly crop progress report, down 2 percentage points from a week ago. Analysts surveyed by Reuters on average had expected a 1-point decline.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.